Hey guys, it's Wayne Scully, business and tax strategist. My firm is W. Scully CPA PC. I'm focused on providing solutions to landlords, flippers, and real estate pros in the New York tri-state area. My firm offers tax compliance, business consulting, and high-value tax planning strategies to save you thousands of dollars. Now, I'm going to do something a little bit different today. I'm going to share my screen and share an excerpt of a tax return a client of mine presented to me that was prepared by another tax preparer, really another CPA, which makes this actually a little bit, worse than, not. I only say this because I'm not trying to put anyone on blast or anything. I'm not trying to make anyone look bad, but these are really the things you want to stay away from. The deductions you want to stay away from when you're a Schedule C filer. And in fact, any filer that's taking a deduction, you ought to be cautious about who you work with and what types of deductions you take, and if they're egregious or if they're just too outlandish, you probably don't want to take those deductions. But before I continue, I'll just share my screen so you can see exactly what I'm talking about. I'm going to go line by line and discuss some of the potential issues with the deductions that this taxpayer claimed. All right. So again, I want to preface this by saying that the tax preparer, for his part or her part, and I'm not going to name any names here, I'm just going to go into the numbers. I'm going to say, hey, this is what you ought not to do, and here's why you ought not to do it. So that's what I'm going to do today. And so let's get at it. Let's get at it. So here we go. I'm going to share my screen. So of course that's me right there. Probably I have to probably move myself a little bit away here. All right, so here we go, folks. This is other expenses on Schedule C. This taxpayer is a disregarded entity. I believe they're an LLC, and they're claiming expenses that will reduce their income. In fact, on this return, they have a loss of about $12,000. Again, folks, this is a teaching moment for everyone. Anyone that's looking to hire someone to prepare their return, anyone that's trying to do a return on their own, these are some of the things you want to avoid so that you don't put yourself at risk for an audit. And I mean, anyone can get audited, but the thing is, will you have support? All right, will you have support that'll show that those expenses are legitimate? Now, cell phone. I mean, I don't have an issue with this per se. It is kind of excessive, I would say. I mean, when we prepare returns for people, we don't audit them. We don't ask them for phone bills and that sort of stuff. It's just not typical. However, if you see a number like this, 4,765, for one cell phone, this person is, by the way, the person is self-employed, as I mentioned before, and they have no employees. So it's one person, right? And they essentially are a broker. They're a middleman, and they typically don't, well, based on my understanding, they don't really go to where the goods are sold. They just bring the buyer and the seller together, right? In any event, cell phone. So this is $4,765. To me, seems a little bit high. But again, if this is what they paid, I know for me, typically my cell phone bill is like $200 a month. So you figure 2 by 12, that's $2,400. So I would probably ask more questions about this. In any event, this is what was shown on the 2020 tax return for this particular taxpayer. Dry cleaning, laundry, all right? My thing is when I talk to the client about this number, excuse me here, this number here, $3,630 for dry cleaning and laundry. I asked them, what type of work do you do? Again, they're like a sales rep, and they don't wear uniforms like a mechanic would or a nurse would. And so basically the code says it can't be something you can wear ordinarily, like outside of your work. So if you have special khakis that you wear when you work in your business, but you could still wear those khakis in the general public, going to a function or a party or something, you can't deduct it. It has to be specialized work clothes that you can't wear anywhere else normally. So that's a no-no, right? That's a no-no, straight up. Can't deduct that, right? Should not. I should say should not deduct that. All right, let's go to disability insurance. Disability insurance, here we have $2,470. So this is actually on Schedule C, and I told the client that, and because they presented the same number to me, this amount, cannot be deducted on Schedule C. You can deduct this as part of your itemized deductions, subject to the 7.5% rule on for medical expenses. You can put that there. So if your AGI is say $10,000, and obviously if your AGI is 10,000, this would not be deducted because it's below 10,000. So it has to be anything that's above 7.5% of your AGI. So clearly, this won't be an item that this client will be able to deduct. Here's another one for you. Uniforms and shoes. Again, we're talking about someone that's a salesperson. They're not a mechanic. They're not any individual that will wear a uniform, a doctor, a nurse, or someone like that. They're just a sales rep, and they wear regular clothes like you and I, and you just simply cannot deduct those shoes that you buy, that you can wear elsewhere. You cannot deduct those shoes. All right. So, and we have, look at the amount, $7,688. I mean, how many uniforms are you buying for the year where you're going to be able to deduct that amount of money? I mean, I think, again, this is egregious. This is a very outlandish number. And I suspect that these kinds of numbers would open up this client to an audit. All right. So let's go to the next one. Promotion and gifts. I explained to the client that with promotion, with gifts in particular, well, advertising is one thing, right? When you think about promotion, we're talking about advertising. So maybe, but again, the nature and scope of his business, I don't expect to see much of promotion there, but let's say for the benefit of the doubt. However, when you talk about gifts, I mentioned to the client that gifts, typically you cannot pay more than $25 per person per gift. That's the amount that you're allowed to deduct. So if you do the math, if this were all gifts, let's say this were even half of this number, $5,000 would be considered gifts. We're talking about 200 people you'd have to give gifts to. I'd have to have that documented. So you just can't put, again, the number is really, I mean, it's really high, $11,000. It's a really high number, right? And again, you don't want to open up yourself to audits. You just don't want to do that. Okay. All right. And entertainment, $16,000. I asked the client about this, what's this about? Well, I took clients out to dinner and so forth and so on, but $16,000, that's a lot of food, right? A lot of food. And we're talking about a one-man show. I mean, if he's entertaining people, is he showing, having a huge ball or something. Like, what's going on here? I mean, is it some sort of Christmas party, a holiday party, I should say? I mean, what is going on? I mean, that again, that number seems very, very high, but okay, fine. Give a benefit of the doubt. Now, when it comes to gas, tolls, parking, and this sort of stuff here, this stuff here, I explained to the client that, you cannot just deduct these on Schedule C like that. They have to be a part of your, um, auto expenses. I'm not clear on the form right now. There's a specific form that those get processed through. But you can't just put down the cost of gas, parking, and tolls as a raw number on the tax return. And besides that, they own a 2017 Toyota, and I just don't see $18,000 of gas there. I just don't see that, right? So again, this is something that you don't want to have happen. You don't want to put these kinds of numbers on your tax return. These numbers are just way too inflated, and they will open you to audit. Then same thing with parking and tolls. And again, this person commutes from Brooklyn or Queens to Manhattan. They've said to me that they do this every day. I highly doubt that, but given the benefit of the doubt, again, the numbers just seem way too high. You know what I mean? They just seem way too high. So I wouldn't do that. I just would not do that. Stationery. So this is what paper and staples and paper clips and that sort of stuff. Again, a one-man office, apparently 100 square foot office. I just don't see this amount of stationery unless he's paying for stationery, meaning he's buying like, cartons of paper or reams of paper to last for a couple of years. I just don't see that number being a valid number either. Again, these are all representation. Well, they're supposed to be representations of the client. We don't audit the client. We don't audit the taxpayer. That if any auditing is going to happen, it's going to be via the IRS. But of course, we have to question something that doesn't seem reasonable. All right. So, telephone. Telephone, here we go, 2070. Okay, so I don't know if that's different than the cell phone. Okay, you could have an office phone and also have your cell phone while you're on the road. That makes sense. That's okay. This for telephone alone, probably telephone, cable, and internet, maybe. I don't see that being telephone by itself. I don't see it. Again, a number that seems very outlandish and egregious. And then cleaning of uniforms. Again, it goes back to the dry cleaning here. Cleaning uniform, dry cleaning. I mean, those two things are essentially the same, and the same treatment as I mentioned before with the dry cleaning of uniforms. You just can't take that on this return. I would not put this on this client's return. I just would not, because it just doesn't make any sense to me. And of course, here's the big one, vehicle maintenance. And ask the client, what do you mean by when you say, because I wanted to be clear on this, right? What do you mean when you say vehicle maintenance? Well, oil changes, I do a routine maintenance every 3 months because I do drive a lot, according to the client. By the way, they had said they only drive 13,000 miles a year. Then they said, well, I drove about 80 miles a day for business from my home office, and that would, but when I did math, it's only like about $9,000 in, well, not maintenance, but in gas, $9,000 in gas to drive that many, assuming you're driving every day, right? Not even counting a 5-day week, I'm counting a 7-day week, which is probably not likely. But I gave them the benefit of the doubt. But even so, that was like about $8,000 when I did the math, factoring a high price of gas, like $5 a gallon or so, which again, I don't think we've reached that yet, or if we have, it has not been consistent. It's only been lately. It wasn't certainly wasn't all of 2021. So vehicle maintenance, like oil changes and that's look at this number, $24,000. Now this person could have practically bought a new car with this. You know what I mean? So that's why I'm saying that this number is again, it's really of all the amounts on this page, this one really stands out. $24,000 for vehicle maintenance. And other vehicle expenses, I'm not sure what that is, a nice round $7,500. Again, the round numbers are not good, and too many round numbers are not good. Not that there are that many here, but still, coupled with the fact that you have a $24,000 vehicle maintenance deduction here, it just doesn't bode well for this particular tax return. So here you go, folks. You know, these are some things I like to point out. I wanted to point out to the people watching and listening. You just don't want to willy-nilly take deductions, you know, with really high numbers. You're opening up at best, you're opening up yourself for an audit. At worst, you may have to, you know, give back some of those deductions, because if you don't have support for them, it's going to be a problem. So again, this is a teaching moment. It's not to, put the client on blast, you know, but again, you know, you people need to know. You need to know that certain things you can't just deduct, you know, at will. I know you want to save on taxes, you want to pay the IRS or whatever, but there are legitimate ways to do that. And I told this client I've been more than happy to have a tax planning session with them to see how we can structure their business, change the formation or whatever we need to do to make it work so that they can legitimately take some of these costs, you know, and reduce their tax liability. So folks, there you have it. I'm going to end my screen share now. I'm going to stop sharing, but there you have it. You know, you don't want to, you know, take excessive deductions. You don't want to, you know, put yourself on the radar, so to speak. Yeah, you know, but again, if you have a legitimate expense, even if it's a high dollar expense and it seems a little bit off, if it's legitimate, if it's reasonable and pertains to the business and you can support it, then you're going to be good to go. Other than that, it's going to be a problem. You know, you don't want to have the IRS breathing down your neck to try to dip in your pocket to get more money from you. So there you go, folks. If you have any questions about this or some of the tax issues I've discussed in the past or something else you want to discuss with me, give me a call. My name is Wayne Scully and I'm with W. Scully CPA PC, always working around the clock to save you a chock full of money, time, and stress. Make an appointment by visiting my website, www.wscullycpa.com. That's www.wscullycpa.com, or call me toll free, 855-254-1892, 855-254-1892. Please comment, like, and share this video. If you didn't like it or you found some issues with it, let me know in the comment section. But more importantly, share with someone. They may learn from it and be better for it. Okay? Thank you, guys. Until next time.